Good morning, everybody, and welcome to Live Trading Room's daily Forex analysis. Today is Friday, February the 23rd, and it's 30 minutes past 11 in the morning. Let's see how the Forex market is performing through the index grid of our best and worst dashboard. The British pound is in first position, gaining 2.40% on its currency basket, followed by the US dollar, ahead by 1.19%. The Canadian dollar is gaining 0.71%. The yen is ahead by 0.51%, and the euro just above parity, gaining 0.23%. The Swiss franc is losing 0.22%, the Australian dollar is down by 1.42%, and the New Zealand dollar comes last, losing 3.40%. The power strength gives us the British pound 100% long and the New Zealand dollar 100% short. We have significant percentages on the US dollar and the Australian dollar also, respectively 85% long and 85% short. The best trades so far in the Forex market are British pound New Zealand dollar gaining 0.83% and Euro New Zealand dollar ahead by 0.55%. Now let's go to the charts to analyze the majors. Aussie US dollar is moving in a bearish tendency just below target number 2 of the bearish zone of the target geometry. We have a confluent price action, a breakout of previous lows on M15 and H1, a bearish percentage confluence up to the monthly level, an RSI below 50 up to the daily time frame, a confluent delta single volume. So with an 85% short Australian dollar against an 85% long US dollar, we may have a continuation to the downside. The euro dollar is moving in a slight bearish tendency just inside the bearish zone of the target geometry below the entry level at 123.15. The market registered an intraday low at 122.79 and then corrected up inside the no trade zone of the target geometry. We have a bearish price action at a scalping and multi-day level. The pair is losing 0.14% on a daily basis, and we have a bearish percentage confluence up to the monthly level. The RSI is above 50 on every time frame except H4 and M1, but we have a 57% short euro against an 85% long US dollar. So should the market remain below 123.15, we may have a continuation of the initial bearish impulse. The cable is moving in a slight bullish tendency. The market found resistance at the monthly moving average, but it's still moving inside the bullish zone of the target geometry above the entry level at 139.69. The pair is gaining 0.16% on a daily basis, and we have an RSI above 50 on every time frame. Problem is both currencies are very strong on their respective currency baskets, so we may have a limited daily range, but should the market remain inside the bullish zone of the target geometry, we may have a moderate continuation to the upside in direction of the weekly opening at 140.13. Kiwi US dollar gave a bearish signal at the breakout of the monthly moving average and the previous daily low. Now the market is trading just above target number 5 of the bearish zone of the target geometry with a confluent price action and a percentage confluence up to the monthly level. We have also the RSI below 50 up to the daily time frame. The New Zealand dollar is 100% short against an 85% long US dollar, so we may have a continuation to the downside. US dollar Canada is moving sideways inside the no trade zone of the target geometry with a slight bullish tendency as the market is gaining 0.05% on a daily basis. Both currencies are very strong on their respective currency baskets as we have a 71% long Canadian dollar against an 85% long US dollar. This condition should have us envisage a limited daily range and maybe a slight continuation to the upside as the market is moving above all the higher moving averages of the EMA dashboard, and we have a weekly and daily statistical forecasts in favor of a possible continuation of the bullish move as the market presents also a bullish percentage confluence up to the yearly level. Later in the day, though, we're going to have the release of the Consumer Price Index out of Canada, so that might inject some volatility on this market, which otherwise could remain constricted inside the no trade zone of the target geometry. US dollar Swiss franc is moving in a bullish tendency, just above target number 1 of the bullish zone of the target geometry. The market marked an intraday high at 0.9363 and then registered a pullback on the entry level of the target geometry. Now the bullish tendency seems to be resumed as we have a bullish price action at an intraday and multi-day level with a breakout of the previous highs from M15 to H1. We also have a bullish percentage confluence up to the monthly level and RSI above 50 up to the H4 timeframe with the exception of H1, a 57% short Swiss franc against an 85% long US dollar. So should the market remain above 0.9336, we may have a continuation of the bullish move. Let's close the analysis with US dollar yen, which is moving in a slight bullish tendency, gaining 0.13% on a daily basis. The market is just below the entry level of the bullish zone of the target geometry at 106.91 after the market corrected down from the intraday high and leaned on the Fibonacci daily fan, which I'm indicating. We have a 57% long yen against an 85% long US dollar, so should the market go back above 106.91, we may have a slight continuation to the upside. That's all for today's analysis. Thank you for your attention. Good day and good trading from Live Trading Room Trading Community.